I think 2011 was probably for many brokers in the room and for many people involved in the industry was the real new reality. I think we saw a lot of getting back to basics in terms of what were good investments and what weren't good investments. It was cathartic in that we saw a great number of pretenders in the industry leave the industry, because it really came down to not just putting up a sign and putting a for sale sign out front. You really needed to know what you were doing, and you needed to know how to attract the investors. I think it came back in many regards to John touched on the fact of where the markets are. We have a market territory at Rand that covers Orange, Rockland, Westchester, Dutchess, and Putnam, and we're going to be going into Bergen. And in each one of those areas, you have good and bad markets, and you have good and bad areas that really have determined what you're going to sell. As you go out further from Westchester, the class of real estate changes dramatically. You know, what you would designate as Class A here, or in Stanford, or in Greenwich, is not what the Class A in Rockland or Orange or in the northern suburbs is. So it made a big difference for us. We saw mostly in those markets which don't have really the same mass that these guys handle down here in a more metropolitan area. We saw owner-occupied do well this year. We saw user real estate do well, and we saw warehouse space that was below a certain square footage. If you were below that 100,000 square foot and guys could get in and move, and they did. This was a year where those that had cash, those that had the resources, took on local banker money and made the move. And in some cases, you're right, Glenn, it was moving some deck chairs on the Titanic. But for transaction brokers, that was good for us. We just hit our numbers again, but I will tell you that we dragged every deal over the finish line kicking and screaming. There wasn't one simple deal